Nicht so spannend wie FT.
Ladies and gentlemen, tourism industry is again a growth market, and a business with growth is interesting for capital. Growth often needs capital, and capital loves figures and KPIs. Welcome to our next session, Capital Markets Meets Tourism, how investors are shaping the future of the industry. My name is Georg Ehrmann von Beuys & Colleagues Consultancy, and I have the pleasure to moderate this session. And I'm really happy to discuss this issue with a really interesting panelist. And please come to the floor. You are still on the floor. Jan Frederick Valentine, Enea Capital Partners, Morgan Lesney, Camden Partners, Jaroslav Czernek, Rockaway Capital, and Sven Ahrens, Senior Advisor, M&A Self-Employed. Jan, you will start with a keynote. Please give us material for an interested discussion.
Yes, I'll try to do this in 9 theses, which, oops, how does this work? No, one back. I'll try to do this in 9 theses, which probably leaves 99% of what could be talked about on this topic out. Yeah. So I'm Jan. I co-founded Enea 7 years ago. We are specialized in fundraising and M&A in travel. So I hope I can add some interesting theses for a discussion with this group later with some people who are even more experienced in that space. Number 1 is travel investment trails industry growth right now. You would imagine that with the industry having record numbers across different sectors. Investment is also at an all-time high. It's not yet. If you look at the beginning of this year, and there's one deal sitting right up front here, that was very big. We have roughly 20 deals in travel tech alone, which might point to a new record, which is really good. But obviously, you have other factors influencing investment than just the industry growth per se. You have still high interest rates. You have, in general, a reluctance of agnostic investors to go big time into travel. To just give you one number here, and we don't have, obviously, the time to go into all the details. Tourism is roughly 10% of global GDP, but it's only 5% of global investment. And that has to do with investors also looking at it as an industry that is highly cyclical, number one, that is also at the behest of course, crisis, political crisis, etc. And even banks today still have sometimes an issue giving money to fund respective deals. We have a particular situation in Germany, and this is, of course, a headline which may sound a bit ironic, but we still do get company decks in German. We do get information in German. It's a global market, and a lot of deals are cross-border. We have a lack of venture capital, in particular, in the German market. But we also have, if you compare it, for example, to a market like Israel, where we see more strong startups coming out of Israel than out of Germany with a 10 million population, because they think globally per se. So I think that's one topic. Might also apply to the French market. You can say more about that. But this global thinking from the get-go when startups are founded, we don't always see here. And that's a major issue, I think. The rumor that you then have is that VCs are not investing right now. And it's a fact. I mean, if you're not one of the top 5% of a cohort in a segment, probably you won't get major investment in the sector. You have a lot of big rounds. You have people investing in AI, in technology. But if you're targeting a specific niche, which may not have a very big addressable market, you're not getting the type of investment that you might have gotten, for example, 3-4 years ago when there was much more money around. Of course, there's also a concern around AI and the big players capturing that market fully. So is Microsoft, is Google going to own even more of the market in the future? And then you're going into a specific niche, you will not attract the investment. This is venture capital. The other element, of course, of the market is private equity, very, very simply put. And yes, we see private equity shaping more and more of the sector. So more than 40% of travel deals last year involved private equity, which is more than in other sectors. You have other industries where the strategics actually invest more and do more of the deals than in travel. So you have a decent evolution in terms of travel deals. The majority of those deals are not 1 billion, the Heathrow deal, or what just happened with Despegar. The majority of those deals are more in the corridor, say between 10 and 150 million. And now, when we talk about exits, and when you're a founder, I think a few things that we see across the board all the time, and that may sound simplistic, but that are really, really important to drive the business I want to talk about just a little more. The first one is here. This is a German thing. We have a lot of entrepreneurs that approach us, I want to sell, but I don't want anybody to know about it. Maybe this is the same in other markets, but basically the reality is that most of the deals that we see are good deals, obviously. And necessarily there's an element that we see in the market that, of course, we don't communicate deals up front, etc. But I think in the German market, we have this behavior of thinking, oh, I'm broke, so I'm selling. It's certainly not the case for most of the deals that we see, and certainly not for the ones that are communicated. The second one is, and probably everyone in this room does, I'm assuming, so we could skip that, but you really need to understand your business. And in a way, what we see a lot of the time with companies coming to us, that number one, the market is not fully understood, maybe the business drivers are not fully understood, and the last point is accounting is not in place. This is a lot of deals actually fail in the DD because accounting eventually is not in the right place. And so if I build a business today, I think the main point is already have it investment ready. I'll get back to that in a minute. Of course, and that's also probably clear to most people in the room, but we get that question asked all the time, why don't I get the same multiple as Booking.com? The reality is any investor will look at the multiple as a function of the future earnings of the company, simply put. So if you're growing fast, you're getting a higher multiple. If you're in a business that is scalable, that has a lot of moat, basically, you also get a higher multiple. If you're a tour operator with a maybe very cyclical business and you're an outdated business model to some extent, you won't be above 5 commonly. And obviously, public market exposure also helps in higher multiple. On the other hand, we also see examples where being public is actually a very, very bad thing. So we have companies in the portfolio where they're public and they are valued less than the cash they have in bank. No longer, but this used to be the case for a lot of time. So being public necessarily isn't a good thing if you look at the influence on your valuation. Next point is, and I think this is also something that is very crucial, we get founders who approach us and say, I just want to sell, and then I'm gonna be gone tomorrow. Maybe you're already at the wrong time of selling. Maybe you should sell 3 years before when the company is doing well and you still want to keep going. Earn-outs have become very common in deals. So more than 1/3 of all deals globally involve earn-outs. And commonly, big enterprise values come with earn-outs. If you have the right strategic acquirer, you will get a higher enterprise value potentially if you align your interest with that acquirer. So basically, what an earn-out means, nothing else that you're getting the money. You're getting some chunk of the money. It could be 50%. It could even be more. If you do really, really well over time, you're getting that at a later stage, commonly 2 to 3 years after you're selling to that respective company. And the other thing that we have also seen consistently being a good structure is that this earn-out is both based on EBITDA and on revenue growth. So you have to align the interest with the buyer, then you can make a really, really good deal. Which gets me sort of to the last point, which is if you're investment ready, if you're selling a company that has all their numbers in the right place, you don't need advisors. So you can avoid us. This is maybe a bit of an exaggeration. We hopefully still add some value, but really the main message, I think if you want to be successful with a tourism company in the financial market, you have to think the logic of the financial market from the very get-go. This will also help you drive your company much, much better. And we see strong differences, I think, still between the Anglo-Saxon world and the German world, and then we go further south, it's not necessarily better. And with that, I want to open the discussion.
Perfect. Jan, thanks very much. I'm really interested what Sven will mean when you said no advisors. I'm also an advisor, so we will see. We'll come back to it. We'll come back to it. But gentlemen, and we see lots of gentlemen here, the capital market is still far away from the quota, I think. We start with an elevator round. Jan, you told us what you are doing. Morgan, Camden Partners.
Good afternoon, everyone. I'm Morgan from Camden Partners. I would say I'm an entrepreneur in finance. I co-founded the firm 20 years ago. And we're now the most active investment bank in technology in France, with a team of more than 60 people. We close, depending on the year, between 40 and 60 deals per year. And over a period of 20 years, it's been a lot of deals concluded. And I myself cover the travel hospitality space. So I have a home market. I have France, but I live in Spain. I live in Madrid, and I also cover the UK, but I think we live in a very global world, and I have the pleasure of going alongside dear partners like Jan, who I see more as partners than competitors. So we have I value the word ecosystem.
Thanks, Morgan. Jaroslav, Rockaway Capital.
Hi everyone, I'm Jaroslav Czernek, I'm a partner at Rockaway Capital. We are a privately held investment firm. We are not a private equity house, so we don't have such a vast pool of discretionary capital to deploy. We are on the market for roughly 10 years, focusing on digital companies or transformational companies in B2C sector across the board, from e-commerce, price comparison. I cover travel. We have also invested in more sort of specific niches like blockchain, where we have a specifically dedicated fund for that. We do some sort of venture capital, which we see more as an ancillary part of the mature businesses which we operate, and the difference, or the way we are trying to differentiate ourselves, is that we do not have so many deals like you have done over the years, but we try to be more involved in the operation of the business and be hands-on with our portfolio companies.
Thanks. And Sven, you give advice too?
Yeah, thanks very much. I spent more the last 15 years on travel, and I've seen both sides of the table. I worked as an investor, building a travel portfolio with ProSieben, investing in e-commerce assets and travel across Europe. We are building up a portfolio of mainly OTAs for flights, for package, for hotels in that regard. And at a certain point, I switched sides and became operational, leading travel agencies for package, also for rental cars and RV rentals. And now it's my aim to bridge between founders and capital investors in order to get them prepared for the market.
Wow, so really experts are here in the panel. And I would like to start like this. The reputation of investors of capital, some use the bad word of the grasshopper, is not always the very best. On the other hand, without investors, any growth reaches its limits, and investments can create great opportunities. We see a change in tech, software, AI. For this, you need money and you need know-how. So let us start with a short analysis. With your international experience, what is your view on the German market? Do you see a lack of investors or capital in the German tourism industry? Would you like to start?
Yeah, I think normally that what Jan told in the beginning, there are a lot of startups in the travel space coming out of Israel. Rather, it's a very small country, so founders have to focus on the global market. And what we've seen is, especially in Germany, founders in the first instance focus on preliminary on the German market, and that does not attract investors to that level as it could be, focusing towards European market. But I think that has changed over the last last years. So these days, with a lot of companies like Flixbus, Trivago, and a lot coming that form, it's becoming much more international, and therefore even a lot of money gets into the German market. So I think the picture has been, as you described, a couple of years ago, but now it's continuously changing.
Why is the German market interesting, Jaroslav?
Sorry?
Why is the German market interesting for investors?
Well, it's the largest travel market in Europe. So if you want to play a larger game, or if you look down the road, you want to be present in Germany. It's the largest country in Europe, apart from Russia, if I say so. And then with very developed tourism industry. So I see it that all the players across the board ultimately want to be present and successful in Germany, as this is the pinnacle of the industry here.
You mentioned on the one hand the startups. I think it's clear that they need fresh money and they are really in the focus of capital. But if we talk about the German market, it is a strongly medium-sized industry here. We have the big players like TUI, Schauinsland, DER, but lots of the German industry are medium-sized. Why should they get involved into the adventure of PE or VC? What is your point? What is your...
I will speak more generally about the market rather than purely German. But I would say, it's become a very interesting moment in the investment world for travel companies. People realize that after COVID, which was probably the worst test that an industry could go through, the industry showed a lot of resilience. I think when you combine size plus resilience plus fun, I think it's one of the best industry to invest in and for the coming years. So, and we don't see so many signs of slowdown. Like obviously it's not a cyclical industry. I think it's a growing industry with bumps. Sometimes you have bumps in the road, right? So you need to be remain flexible in terms of your capital structure, your cost structure. That's why having a serious investor alongside it can be extremely important in those tough times. So, just to add a fun note on that, I would say to entrepreneurs in the room, like try to not avoid advisors, try to avoid investors as long as you can. It's not like avoid investors in general. It's like avoid investors as long as you can. I think one of the worst mistake that entrepreneurs do in general is like going to fundraise too early when you don't have enough signs of things, of concreteness. I think it's important that you realize that it's a very big industry, but it's a very competitive space. So don't avoid advisors, don't avoid investors, of course, but do it at the right time.
Yeah, and please tell us, why is it interesting for venture capital or PE to invest into the tourism industry due to the volatility of the business? One terror attack in Spain. I don't want to talk about COVID. This was a global problem. Or I think there should be some instance which doesn't make it interesting. Why is it still so interesting for venture capital to go into the tourism industry?
Well, first of all, I would probably disagree. On a high level, other sectors are more investable, right? Number two, if you look at the impact of events outside of COVID, they're usually very, very short. And that's something that we need to explain to private equity. Yes, you have even, like, let's look at Israel and the impact on Egypt. That had an impact for 2 months. That was a very long impact. Now it's back, right? So basically this is the translation work that we have to do with investors, especially private equity. But it's not that per se, as I mentioned before, it's not per se that they're all craving, if they're agnostic. Of course, you have some that only invest in tourism, right? And we maybe didn't talk about one in the previous section that wanted to almost acquire FDI, but those who are agnostic certainly are still cautious.
I actually agree with you that the industry is specific for specific type of investors. If you look at across the board with private equities who are looking at 5 to 7 years investment horizon, it's more often than not that you have, 1 year or 2 years affected by terrorist attack or by external affairs, right? COVID was different, but it was long-lasting impact. But ultimately, it's a growing business, it's a growing segment, and across the board, it's I would say safe investment and safe bet on to invest in travel, because it is across last 15, 20 years. It is growing with the disposable income growing from the population. People like to travel. COVID even reinforced this. So I'm happy that there's not such a big competition in terms of investment. Depending if you're on the buy side or sell side, of course, but depending on which side of the table you sit.
Yeah, if we talk about the two sides, it's not a one-way street. When are tourism companies interesting for investors at all? Where are the opportunities? Where are the risks for a company? I think you give advice to, if you want to be a bridge builder, what are your experiences?
I think these days, if you're a startup, you have to have your view about on the value chain that you're operating in, right? I've talked to a lot of startups and say, we have a standalone market position and when you want to grow in that market. And I think what helps a lot is if you understand early what is your potential position in the market, in the value chain, and where can you add value towards a bigger conglomerate or a bigger partnership leveraging their customer base, etc. And I think that's a good point for getting in touch for startups and get in touch with capital advisors or also with other companies that they are interested in to work about, right? So that's the topic. So if you start a business, you should have an early view taking both positions. The operational perspective, as Jan said, becoming investment ready, know your numbers, but also the perspective on the market that you're operating in and what is the wider ecosystem.
And we have a look at an existing company, no startup. What are the reasons for you to invest, to give the advice? Now it's the time to come in with capital, to bring in technology, AI, investments. What do you think? Why should I say I have a good running business and I see into the future? Why should I bring in somebody, a shareholder, into my old family structured German travel office or whatever?
I think it's depending about, as Jaroslav said, right, what is your own investment horizon? I think we see a lot of companies in the German market that needs a successor for their business, right? Because the founders becoming older and they have to make up their thoughts. What is the future of the company? What is the setup of the management team? And that could be a good point. Making their thoughts about the next steps of the company, but also the new trends like AI, having a look at what does that make towards my business and how could we shape the business again, and that could potentially require additional capital investments in that. So that could be a good timing.
Yeah, thanks. I think you all made smaller deals, big deals, perhaps failed deals. Let us share a little bit experience now. Jaroslav, in the tourism sector, what was your most demanding deal regarding complexity, amount of the deal, people involved? Take your pick.
Well, I don't know if it's a deal. I mean, we like complex deals because it's usually less competitive. So, as some of you might know, we have acquired a travel asset of Unister when it collapsed and it went into bankruptcy. And that was fairly complex for us. It was fundamentally great business, we liked it, but it was, of course, what Jan was saying, you didn't have all the accounting, you didn't have all the numbers, you couldn't prove, you still had pinch of doubt why it actually went belly up, what was the reason. So I would say this was probably the most complex on terms of context. In some of our other investments, we had other complexities, but let's focus here on travel. But I think in operational matter, COVID was for me the biggest sort of complexity that I had for a year and a half, and I wouldn't like to repeat this. This was.
I think no one wants to.
This cost me a lot of energy.
Sven, how do I actually have to imagine that? Is the investor looking for the customer or is the customer looking for it? And how does he find the right investor? So your bridge building.
Well, I think ideally they have the chance both for looking around, right? So I think those fairs like ITB or other opportunities to get connected within the industry are the ideal platform for having early thoughts about what is the future of the company. Is there anybody interested to cooperate, right? It's not necessary about capital investment. I think most of the deals that developed comes out of the cooperation, right? So people understand how the mechanic work into each other, how we can create value together, and I think this is a very important topic.
You have an example?
Well, not exactly on that, but I think out of my own history and experience, I think being here in ITB, when we built up our camper business or RV rental business and started in 2019 with Camper Days, I think it was really important to be here and talk to a lot of guys from all over the world, and that helps us a lot to get a lot of new partners on board and helped us to grow into more than 15 markets. So it was really helpful to be aware of what are potential partnerships and to make connections. So,
Jan, what was the biggest disappointment for you in the capital business?
Yesterday or today or the conversation I just had with Morgan? No. No, that was only today. No, I mean, the reality is that a lot of deals fail, and that's maybe something that people don't see as much when they see a new deal announced, how often that one deal has already failed on the way, potentially, how often other deals have failed, but also have to say we're rather proud to then have deals that work out afterwards as well. And it can take 2 years. I mean, some of the exits that we did out of the German market, cross-border, took 2 years and they failed twice. And then we track every hour we work, and then you see, you have, I don't know, 2 years spent and you have no return. That's quite frustrating.
What are your experiences? How long do you think in the middle is a deal? Is there could you say 3 months, half a year?
3 months, never. Never. But I'd say it takes a long time. Depends on if it's a venture, a VC, fundraising, or PE deal, or a strategic deal. I think PE deals tend to be like a bit more structured. Like you can, between 6 and 9 months, if you're PE ready, 6 to 9 months you have a deal. Then the rest is more like random. But I think what I used to say to entrepreneurs is like, make sure that if one day you want to sell your company, make sure that you start well ahead of that. It's not like, okay, one day you wake up and say, I want to sell my company and the money is going to be in my bank account in 12 months. It doesn't work like that. Usually you start preparing, getting identified by your future buyer, some years before even thinking of selling. So I think you should be, as a founder of a company, even though you don't necessarily want to sell, you have to entertain a relationship with your ecosystem of future buyers. I think that's a relevant thing to do when you're a founder.
And I think you need to understand the specific business. How do you get this knowledge in your deals?
In the company that you're advising?
Where you're investing, because one is the due diligence, but the other thing is how is the business? How are the customer relationships?
It depends, because we don't always, Jaroslav is an investor, so he's going to invest a lot of time and energy to assess the quality of a company, whereas as advisors, we have usually a few hours to bet 6 or 9 months of our life. So sometimes we can make mistakes, okay? Sometimes we're too enthusiastic, sometimes we dream. But I think an advisor should be the one always seeing the half full glass rather than the reverse. So I think it's a funny game.
Are you happy with this funny game sometimes, or is it frustrating? What is the motivation?
I think it's very interesting to help companies to get prepared for such a stage, right? Because you learn a lot on that journey, and normally, not only as an advisor, the whole company is learning through that process. And I think normally the feedback is that they were growing throughout the process. And as Morgan said, it's not starting with the idea of selling and then afterwards 6 months you have done that. It's more like building up the company over years, and then you're building up the right relationship, you're getting a feeling about how you can shape the industry with your product and your connections. And I think that is the start of the journey.
And what does an optimally prepared candidate look like for you?
I mean, as Morgan said, we are looking, I'm kind of skeptical person, so more often than not, I don't like the companies that we look at, and I see more often than not risks and reasons why not to invest. But once in a time, you kind of have a good feeling, you see the right trajectory, you need to understand the fundamental macroeconomic matters. I mean, that's the fundament, right? If you believe that in 10, 15, 20 years this company can be relevant, might be reshaped, might be repositioned, but that's a good fundament. You need to believe in the team and in the product, and that it's not just a niche that changes, that can be used as an add-on, but it has to be fundamentally self-sustained. And that's why I look much more often on more mature mid-market companies than venture capital. I don't have the creativity of assessing the real impact of the innovation on our lives. So I kind of leave it for other people to do.
Assuming that more capital is now flowing into the German tourism sector, how much will the industry, and here I don't mean giants like TUI, Schauinsland or Dabei, how will an industry that is often characterized by management by stomach or by intuition change? How will it change? Do you see more quality? Will the industry lose a bit the character because we talk about figures, KPIs, quality management? What do you accept? What will be the positive effect for the whole industry?
I mean, I think maybe to the point Sven made initially, of course, there is change already. Companies that have been venture capital funded have a different approach to numbers, have a different approach to scaling. Scaling is one key word that we're all talking about here. If you have a scalable business model, you're sort of investment ready as well. If you can then also prove it. I think the other thing certainly is going to be you go through all of these halls and there are literally zillions of business models that all work together. It's fascinating, right? And of course, capital brings different elements of the value chain together. So I'm assuming we will also, for example, let's say in the package business, we will see more, at least medium to bigger players again down the line if capital private equity comes in and consolidates a few of them into stronger entities with stronger buying power, etc.
And there is a consolidation game to be played, right? I mean, because the market is very fragmented. I mean, we can see it here just at the ITB. Right?
Because there are really strong challenges for the industry, for the whole industry, but especially also for the tourism industry. If we talk about the next panel, technology as a driver, do you think that in this situation now, there is enough competence, there's enough money for the German industry to succeed in this? Or do they need your help and it's the right time now to bring in investors and capital? What's your idea on this?
I think what we see is that I don't want to talk so much about the German industry because most of the players we see here that have their roots in Germany are aiming for the international markets, right? And I think that's fundamentally different like 10, 15 years ago. And therefore, I feel very confident that there is the right attitude of shaping this future going forward with going international at the early stage and not just thinking about the German market in the first instance.
No decks in German, as Jens said. I think it also applies to other European countries. Some I know well. I think Europe is a constellation of strong mini markets. So if you don't feel that you can become a larger player, that the dominating player of your own country, then probably your journey will stop quite rapidly. Meaning you won't be bankrupt, but people will buy you, because I think it's all about size. It's all about geographical coverage. So, and the real question you need to ask yourself is like, do I want to consolidate my market, or do I want to be consolidated? I think both answers are fine, but you need to be well positioned on one of the two options.
Did one of you made experience with the German angst? Did deals crash due to this? That at the end, oh, I'm not willing to do this, or
We have
do you
seen
think
all-
they are open-minded and it's
seen all-
business-like in every country?
Everyone is afraid at the evening before the deal, and that's independent of being German or from somewhere else. I don't think that is an issue.
So no difference between the UK market or French market or German market?
Well, again, I mean, you have. I think if you look at the Anglo-Saxon market, you have a. It's not. I don't think it's German angst, but you have a faster attitude to things. You also in Dutch market, you have a faster attitude sometimes to getting things done in a more straightforward manner. I think we can be quite complicated in that. But I would say.
Well, due to the time, thank you very much, gentlemen. Time is running. I think you saw that there are lots of opportunities. And it's a journey. It should be a long journey, but at the end, we see quality, we see opportunities for the technological change. And the next panel, technology as a driver of individualized travel experience, starts in 5 minutes. So thank you very much, gentlemen. Thanks for your attention.